Hey, Kevin here, top 100 financial advisor and best-selling author, and we are here to talk about the stock market. I am going to break down the two ways, there are really only two, the two ways that you can make money in the stock market and really break things down to help it make sense, because a lot of people, when you are brand new, you got tons of questions, and I am the person to answer these questions. But you just open your brokerage account, you're thinking about getting in the stock market, what to invest in, how to invest, how to make money, how does all this stuff work. It can get real confusing real quick, and if you don't know where to start, or at least have that building block, then a lot of this stuff can feel like a lot of pressure. You lose money, you don't understand, and it all falls apart. So let's clear it all up. Let's start at the very beginning, and then we'll talk about just the two ways that you can make money in the market. Number one is you gotta open an account. Hopefully you have done that. If you haven't, I'll put a referral link below for Public. I like Public because it shows you exactly what I'm investing in, because people ask me all the time, what stocks make sense? I don't know, the ones that I own, right? I obviously believe that those are good investments for me. You have to decide if those are good investments for you. So that's number one, open an account. Number two, put money into the account. Deposit money. You cannot invest without money. Doesn't have to be a whole lot of money. It can be $5. That works. $10 is better. $100 is more, right? But you do have to deposit money, because you use that money to buy stocks. And once you buy stocks, in this case, you got two ways to make money. And that's where we are. All right, so step number one, or option number one, or way number one, however you want to phrase that, is dividends. Dividends are what I like to call bonus payments for owning a company. Coca-Cola is known for paying great dividends. I talked about Lowe's. They've been paying dividends for forever. And basically, I own the company. I am literally an owner. I'm a tiny owner. I'm an owner of that company, and when they do well, they pay me money. Now, how much do I get paid? Honestly, not a lot, but these amounts can add up. If you have enough shares, you can get a pretty significant dividend payment. Usually dividend payments are quarterly, which means, let's say they are going to pay $1 for every share that you own. That means you're going to get 25 cents 4 times a year. You add that up, that equals $1. That is one way to make money in the market. Some stocks pay dividends, some stocks don't. That's really on the financial health of the company, as well as their philosophy. Some companies, let's say a Netflix, says, look, I'm not going to pay dividends. I'm going to take all the money I make and I'm going to get more content. The Harder They Fall, amazing movie. If they paid dividends, maybe they wouldn't have afforded that, because they gave all that money to us, right, as shareholders. That is some companies' philosophy. Amazon, don't pay a dividend. They're trying to be really big and really aggressive. They feel like they don't have time to pay dividends. Totally fine. Other companies, Coca-Cola, Lowe's, Home Depot, they say, look, if you hold our stock, we're going to consistently pay you. And in fact, in the case of Lowe's, we're going to increase this dividend and pay you even more every single year. They've been doing that for I forgot what the stat was, 40 or 50 years or something. Lowe's has been on it from a dividend perspective. If you want to know what dividend stocks to look into, feel free to check out that video. All right, so dividends, that's one way. How I feel about it, if I get a company that pays dividends, cool. If it don't pay dividends, fine. I'm not going to be stuck on it. I like it if I can get it. If I can't, it's not a deal breaker for me. But again, that's number one. Number two, and the fancier way, the more profitable way, if you ask me, is through capital gains. That means that I buy it at a certain price, the value goes up, and I sell it, and that is the gain. The difference between what I bought it for, what I sold it for. That is where most people are trying to make their bones, make their money from the market, is through capital gains. There are different strategies and styles to use that strategy, or to use capital gains. That's where things start to get confusing. For example, a long-term investor says, like I did last year, I said, I think based on where the virus is, and I don't think it's going to be here forever, based on how Google did last year, I think that this is going to be a great company. So I'm going to buy it in December of 2020. And I'm going to hold it for forever, but hold it for a year, hold it for 5 years, however long. And as time passes, Google will become more valuable, more valuable, more valuable. And when I bought it for, I'm making up a price here, bought it for 100, in the future, I think it could be 500. So now I made $400. That is capital gains. Day traders, people who are really into charts, say, look, I'm gonna buy it here, I'm gonna sell it here within a day. And they try to jump in and jump out by trying to capture those movements between the stocks. It's still, at the end of the day, capital gains. I'm buying low, I'm selling high. That is their objective. Then you have swing traders. Swing traders, did a video on that. They are trying to take advantage of big swings in the market. Some stocks have seasonality. Think of like a Target, right? It makes sense in the mind's eye that back to school season, holiday season, that's going to be the time that that stock tends to rise every year. So a swing trader says, look, I'm going to get it in May, or let's say I'm just making up months here. I'm going to get it in April and hold it through December, and every January I'm going to sell it. And I'm trying to get that swing. I'm getting it while it's low, selling it while it's high, and that is capital gains. All of that stuff is capital gains. But at the end of the day, it's still just two ways. It's either capital gains or dividends. And that's it. Those are the only two ways. I really don't have to say more. So those are the two ways that you can make money in the stock market. The next thing that you need to do is figure out what style makes most sense and what is easiest for you to latch onto and understand. For me, long-term investing, even in index funds, we've talked about index funds before, that's the easiest way. It is easier, I've talked about this before, in terms of successes and mistakes. Long-term investing, super easy. I buy, I hold, I don't mess with it. Over time, the market moves up. I'm good. That's easy for me to do. If I want to do swing trading, a little bit harder to do, but I can still make money. You want to do day trading, really, really, really hard to do, but you're still doing capital gains. They really don't have much to do with dividends. Dividends, I buy, I hold, I get paid. I buy more, I hold, I get paid. And it's just a super simple, boring strategy, but effective one as well. Just because it's boring don't mean it don't work. So there you have there. So that's it. Those are the two ways to make money in the stock market. I feel like I was talking really fast. If I was, I apologize. But that's it. It doesn't matter what happens after this, right? Those are the two ways you make money in the market, and you can add on strategies to enhance the ways that you make money in the market. But that's it. Those are the two ways. That is it for us. Let me know what questions you have or any strategies that you want me to cover about how to enhance those gains and other ways that new beginning investors can figure out the market. All right, that's it for me. I'll talk to you guys later.